Good morning children. Welcome back to macroeconomics class. In the previous class we had an introduction about macroeconomics. Today you will learn the second chapter from macroeconomics, that is national income accounting. In this chapter we will discuss about the some fundamental functions of simple economy. So you will learn this lesson in different three parts so that you can grasp the things easily. So in the first part of this lesson, we will discuss about some important terms such as consumption good, capital goods, final goods, stock and flow variables, and also depreciation. Okay children, let's move to the topic. Children, today you are going to learn the first part of the lesson, national income and related aggregates. That is, the first part includes the basic terms of macroeconomics, that is consumption goods, capital goods, final goods, intermediate goods, stock and flows, gross investment and depreciation. Before that, you have to understand what is national income of a country. What is national income of a country? It is the sum total of factor income earned by a country during an accounting year or a financial year. What is factors of factor income? Actually, the factor income refers the income coming from the four factors of production, that is land, labor, capital and organization, and also the income from wages, interest, rent and profit also will be calculated in the national income of a country. So in this lesson you will study all the important aspects related to the national income. So before that, let's see what is the term goods and services refers. What do you mean by goods? All things that satisfy our human wants are called goods. It is also known as material goods. Material goods are tangible goods which can be seen and touched. For example, furniture, car, pen, etc. So what is goods? All the things that satisfy human wants are called goods. It is also known as material goods. These material goods can be tangible. That is, we can see and touch those things. So it is called tangible goods. What is services? Services are similar to goods. These are also known as non-material goods. Goods are known as material goods, whereas services are known as non-material goods. Non-material goods are those commodities which cannot be seen or touched. For example, service of a teacher and a doctor, etc. So, services are non-material goods and also it is intangible. Children, the material goods are further classified as final goods, intermediate goods, consumer goods, etc. So let's check what is final goods first. What is final goods? That is an item that is meant for final use and it will not pass through any more stages of production or transformations is called a final good. What's that? An item that is meant for final use and it won't be passing any further stages of production or transformation is called final good, because once it is sold, it passes out of the economic flow, so it won't undergo any further transformation at the hands of any producer. For example, a farmer produces cotton from his field. Then he sells this raw material to the cotton mill. After yarning a process from this cotton mill, it moves to another place, that is textile mill. After some production process, these clothes are ready to be sold and finally it reaches to whom? Finally it reaches to the consumer. Then there won't be any further transformation happening for this cloth. So it is the final good. That means an item that is meant for final good, final use. It will not pass through any further stages of production or transformations is called a final good. So children, I hope that you clear about the term final goods. The next classification of material good is consumer goods or consumption goods. What is that? Goods like food, clothing, and services like recreation that are consumed when purchased by their ultimate consumers are called consumption goods or consumer goods. Clothes, bed sheet, bread, pen, etc. are the examples of consumer good. That is, we can use it directly for our satisfaction. So, goods like food, clothing, and services like recreation that are consumed when purchased by their ultimate consumers are called consumption goods or consumer goods. So, what do you mean by consumption goods? Consumption goods are those goods which are directly used for the satisfaction of human wants. For example, bread, TV, clothes, bed sheets, all these are the examples for consumption good. Next, we are going to discuss about capital goods. What are capital goods? The goods that has durable character which are used in the production process like tools, machineries and also used for several years are called capital goods. Actually these capital goods are meant for long run purposes. By using these capital goods we are making the other commodities feasible. The goods that has durable character which are used in the production process. Example for capital goods are tools, different types of machineries, etc. And also these type of machineries we can use for several years. So these are called capital goods. They make production of other commodities feasible. Also they themselves don't get transformed in the production. They don't get any changes in the process of production. The capital goods gradually undergo wear and tear and thus that are repaired or gradually replaced by over time. So what is capital good? The good that has durable character which are used in the production process are called capital goods, and also they can be used for several years. That is, by using capital goods we are making other commodities. Children, next we are going to discuss about consumer durables. What do you mean by consumer durables? That is, some commodities like television set, automobiles or home computers, so although they are for ultimate consumption, have one characteristic in common with the capital goods. That is, they are also durable. That is, they are not extinguished by immediate or even short period of consumption. They have a relatively long life as compared to articles such as food or even clothing. They also undergo wear and tear with gradual use and often need repairs and replacements of parts. That is, like machines, they also need to be preserved, maintained and renewed. That is why we call these goods are consumer durables. The final goods and services produced in an economy in a given period of time, they are either in the form of consumption goods or capital goods. As final goods, they do not undergo any further transformation in the economic process. These consumer goods do not wear out quickly and therefore do not have to be purchased frequently. Children, the next category is intermediate goods. Intermediate goods are mostly used as raw material for inputs for production of other commodities. This is not a final good. Intermediate goods may be used by other producers as material inputs. Examples for intermediate goods are steel sheets used for making automobiles. So that steel sheets acting like an agent for making the automobile. So these are the intermediate goods. And copper used for making utensils. Intermediate goods are crucial inputs to any production process and a significant part of our manpower and capital stock are engaged in the production of these goods. The value of final goods already includes the value of intermediate goods. So counting them separately will lead to the error of double counting. What is double counting, children? That is, the value of a commodity is counting more than once. This is known as the problem of double counting. See, if the problem of double counting happened in the calculation of a national income, then we will get a wrong figure. That is, it will be reflected higher than the actual value. Actually, in the calculation of national income, we will consider only the value of final good. The value of this intermediate good is already added along with the value of final good. So, no need to add the value of intermediate good again. It will leads to the error of double counting. So, the value of final good already includes the value of intermediate goods. So, no need to count it again. Children, next we are going to discuss about stock and flow variables. Stock and flow are interdependent on each other. Income, output, or profits are concepts that make sense only when a time period is specified. These are called flows because they occur in a period of time. Therefore, we need to specify a time period to get a quantitative measures of these. Since a lot of accounting is done annually in an economy, many of these are expressed annually like annual profits or production. Flows are defined over a period of time. For example, sales, savings, etc. The next is stock. A stock is a variable which is measurable at a particular point of time. It has no time limit. Stocks are defined at a particular point of time, but flows are defined over a period of time. How stocks are defined at a particular point of time. However, we can measure a change in stock over a specific period of time, like how many machines were added this year. Such changes in the stocks are thus flows, which can be measured over a specific time period. That is, flows are defined over a period of time, but stocks are defined at a particular point of time. What is the difference between these two? That is, in a flow variable, if you check the sale of a firm, you will consider the sale for a week or even a month, not in a particular date, not based on a particular date. That is, we are considering it's over a period of time. But in the case of stock variable, for example, when we check the water level of a reservoir on a particular date, you will get the exact quantity of the water on that date. That is, it is defined at a particular point of time, whereas the flows are defined over a period of time. Children, now you are going to learn about the three important terms, that is gross investment, net investment and depreciation. What is gross investment? Gross investment refers to the total purchase or production of capital goods during one accounting year. It is called a gross investment. It helps in increasing the production capacity or scale of production of the firm. So, what is gross investment? Gross investment refers to the total purchase or production of capital goods during one accounting year. Next is depreciation. The monetary value of an asset decreases over time due to use, wear and tear or deterioration. The deduction or deletion which is made from the value of gross investment in order to accommodate regular wear and tear of capital is called depreciation. That is, depreciation represents how much of an asset's value has been used up. What is depreciation? The monetary value of an asset decreases over time due to use, wear and tear or deterioration. The next is net investment. New addition to capital stock in an economy is measured by net investment or new capital formation. This net investment is expressed as net investment is equal to gross investment minus depreciation. The formula for calculating net investment is investment equal to gross investment minus depreciation. So, the gross investment refers to the total production of capital goods during one accounting year. It includes capital goods used for the replacement of existing capital stock, which is also called depreciation. Capital goods used as a net addition to the existing capital stock. So children, we have covered the first part of the lesson, national income accounting. That is, the basic terms that we have discussed in this today's session are consumption goods, capital goods, final goods, intermediate goods, and also we have discussed about the stock and flow variables and depreciation. The notes for this lesson and URL also attached for you. So watch this video and learn the topic thoroughly. Okay children, thank you. Stay safe and have a nice day.